Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I'm going to share with you my thoughts on the exciting new spin-off company from Gold Resource Corporation. They're spinning off their Nevada operations, and I've taken the time to put a little presentation together for you and kind of share with you my thoughts on what that company might be valued at as a separate publicly traded entity. And to me, it's very exciting. There's great prospects with this Nevada operation. If the numbers, if the gold price stays where it is, or maybe even goes a little higher, it could be super exciting in terms of where this stock could go in the next 6 months, 9 months, year and a half. There's some really great prospects. So I'm putting these numbers together just based on publicly available information. And again, this is just my opinion, not a recommendation for you to buy or sell the stock. But I think there's a real compelling story here. So let's dive into the presentation. Gold Resource Corporation, Nevada operations. Analysis of why GoRo Nevada operations are worth as much as, maybe even more, than $20 per share as a standalone entity. I conducted this research on October 17th, 2020. And I just want to mention I'm not compensated directly or indirectly by the company or by anyone else for sharing my ideas and my research. And what I'm going to share with you is just that, my ideas, my research, based upon publicly available information. I do hold a sizable position in GoRo stock. It's in a self-directed IRA, so that can explain to you my keen interest in the company and my strong belief in their ability to, successfully provide long-term positive returns to shareholders. The split. Gold Resource Corporation, stock symbol GORO, G-O-R-O, recently announced their intention to split the company by spinning off their Nevada operations into a separately publicly traded entity. GoRo shareholders, current shareholders, will receive a 100% ownership interest in the new Nevada operations company when the shares are distributed on a pro rata, which means proportional, basis. My estimates call for shareholders receiving 1 share in the new company for each 3.5 shares of GoRo held. That would be on the date of record. The deal is expected to close around year-end 2020, pending appropriate approvals, and at that time we'll know what the record date is and all the other specifics. Why? Why split the company? Well, the reason is the companies will be worth more as separate entities. After the spinoff, GoRo shareholders will retain 100% interest in the Mexican mine operations. These operations have an impressive 10-year profit and dividend-paying history, and great prospects for future growth. Post-spinoff GoRo will essentially be the same company it was in September 2016. At that time, GoRo only had the Mexican operations, just like they'll have after the spinoff. GoRo will just have the Mexican operations. In 2016, Nevada was still essentially a dream, and GoRo stock back then in 2016 had a market cap close to twice of what it is today. Holders of the spinoff shares will retain 100% ownership in the Nevada operations. So what is Nevada worth as a standalone entity? We know that GoRo will retain the Mexican operations just like it essentially has had for the last 10 years. But what is this new entity worth? What are the Nevada operations worth? Well, here's what we know. There'll be 20 million shares in the newly spun off company distributed to current GoRo shareholders. They'll be given $10 million in cash to start. That's 50 cents a share. Current Nevada mine is forecasted to produce 40,000 ounces of gold per year starting in 2021 at an estimated cash cost of $6.50 per ounce. Recent gold production of 8,000 ounces in Q3 2020, while still in the ramp-up phase, well on its way to reaching targeted production of 10,000 ounces per quarter in 2021. So in this most recent quarter, they produced 8,000 ounces, very close to the 10,000 that they're projected to be able to produce per quarter in 2021. We also know that the Nevada operations has an extensive land package, East Camp Douglas, Golden Mile, several others, and they're currently drilling. There's also great synergy opportunities because the company owns these 4 potential mining sites within close proximity to the current mine. Likely they'll have zero debt and continue to have high inside ownership. So let's dig into the numbers. Here are some rough back-of-the-napkin estimates for the spun-off Nevada operations. Annual revenue. We know they're projecting to produce 40,000 ounces of gold, and I'm going to conservatively price that at $1,800 per ounce. That comes to $72 million in annual revenue. Expenses. They've told us to expect about a $650 per ounce cash cost from the Nevada operations. I'm going to bump that up to $1,200 for what I'll call all-in cost. 1,200 ounces at, $1,200 per ounce at 40,000 ounces is $48 million in cost. That gives us about $24 million in gross margin profit. We'll knock out $8 million for overhead, the corporate office and the catered lunches and all that good stuff, and about another $6 million for taxes. That leaves us with $10 million in total profit. So let's take a look at those numbers on a per share basis. $10 million in profit divided amongst 20 million shares equals about 50 cents per share profit on an annual basis. Profitable gold mining companies trade at multiples to earnings, also known as the PE ratio, between 10 and 20 times. At a conservative 10 times multiple, the stock price would be $5 per share. That's 50 cents times 10. Now, it's also important to remember that the Nevada operations could produce more gold at a higher price and be given a higher multiple to earnings from the market. We'll take a look at that on the next slide. Another important note to remember, the second note, or the final note on this page, is that we need to remember that current GoRo shareholders who receive and hold the new Nevada operation stock will have a fewer number of shares in the Nevada operations relative to the GoRo holdings. They'll still own 100% of the Nevada operations, but because there's 70 million shares of GoRo outstanding and they're only issuing 20 million shares in the new company, you'll essentially be getting 1 share in the Nevada operations for each 3.5 shares that you have in GoRo. Now let's take a look at an optimistic scenario. $20 per share. That must be a typo. $20 per share? Well, let's just read through the slide and see what we find out. When the input assumptions demonstrated in the previous scenario are adjusted for a more optimistic gold price of $2,000 per ounce, which it hit earlier this year, annual Nevada operations production of 50,000 ounces per year, which is not out of the question, and the company being generously granted a realistic 15 multiple to earnings, PE ratio, one arrives at the following stock price. So the revenue under those parameters would be this: 50,000 ounces of gold produced per year at $2,000 per ounce comes to $100 million in revenue. Expenses per ounce would remain about the same, $650 per ounce cash cost, which I'm bumping up to $1,200 for quote-unquote all-in. At that level, you have $60 million in cost, so you get $40 million in gross margin profit. Again, we're going to deduct another $8 million in overhead, the fancy offices, salaries, all that good stuff. And $6 million will go to taxes. Under that scenario, we wind up with $26 million in total profit. Now, take that $26 million and divide it amongst the $26 million and divide it amongst the 20 million shares outstanding, and you arrive at $1.30 per share profit. Profitable and growing gold mining companies often trade at 15 times multiple. Again, that's the PE ratio. If you multiply 15 times $1.30, you come up with $19.50 per share for the Nevada operations. So maybe that was a typo. It should have said $19.50 per share. But as you can see from my example, my demonstration here, a stock price for the Nevada operations approaching $20 per share is not optimistically crazy optimistic. It's actually somewhat realistic. And you have a lot of people calling for a gold price of $3,000 per ounce. Some of the big banks, Citibank, some of the big quote unquote reputable investment banks are calling for $2,500 an ounce, $3,000 an ounce gold. So this is not out of the question. Conclusion. The current GoRo stock price of $3 per share, that must be a typo. No, unfortunately, folks, that's not a typo. But $3 per share represents a deep value opportunity in GoRo stock when one considers the following. The post-split GoRo with the standalone Mexican operations represents a value at least equal to the current market price of $3 per share, and likely much higher when compared to many periods in the company's history when they were exclusively mining in Mexico. So if you compare the past GoRo, the GoRo of 2014, 15, 16, when they were only mining in Mexico, to the future post-split GoRo, when they're going to be doing the same exact same thing, only mining in Mexico, and you look at market caps of the past GoRo, which were at many points twice what they are today. Stock price should be twice where it is today. When you look at that today, just the Mexican operations alone at $3 per share represent a great value. But on top of that, you'll be getting the spun-off Nevada operations, and they will likely achieve a stock price between $5 and maybe even higher. $20 per share is a realistic expectation when moderate improvements in gold price, mine production, and market sentiment are taken into account. So, at $2,000 gold, we saw what the numbers could look like. Imagine what they could look like at $2,500 gold. So, hey, I appreciate you watching my video. If you have any questions or comments, please feel free to share them below. And like I said, make your own decisions. Good luck, and we'll talk to you soon.